Now, in terms of quickly going through some of the biggest trends influencing our industry, the three biggest trends that are impacting everyone in financial services today are pretty much digitization, regulation, and the changing investor preferences or personalization. Now, I'd like to start with the comment that technology is changing the pace of change at an accelerating rate, such that life will never be as slow as it is today. Now, we know technology, machine learning, artificial intelligence has the opportunity to create huge operational efficiencies for businesses. They can decimate industries, they can create jobs, and indeed, it can transform lives. But if you think about the term artificial intelligence, taking lots of data, applying some very smart formulas or algorithms, and having actionable insights, this term was coined back in the 1950s. Why is it now that actually is becoming mainstream? And the answer to that question is those lines that you see on this chart. The per unit cost of the essential ingredients, being memory, computing, and storage, has dropped to a fraction of what it used to be in the 50s. Back in the 50s, you wanted to store some data, a storage unit for 5 megabytes, you needed a forklift. These days, 4 terabytes is in the palm of your hands, a small gadget. If you think about every trend that's taking place in the marketplace, the rise of passive, i.e. technology bringing us ETFs. If you think about holistic financial planning, big data, small data, which is business intelligence, it is essentially all these advanced technologies that are trying to solve these challenges. Be it artificial intelligence, be it Internet of Things, blockchain. In fact, cloud computing and componentization are all changing the way investors experience markets and business models that are delivering services to clients. Now, the so what factor. About 5-10 years ago, we'd be thinking, how can technology make me do things a bit faster and better? In today's age and going forward, you should be thinking about what technology helps me do things that I could simply not do before. New products, servicing new markets. But if you think about regulation, well, regulation lags innovation by about a decade. The Financial Services Inquiry, the Royal Commission, brought us some skeletons out of the closet that a lot of us kind of knew about a decade ago. There were a few bad apples that kind of made things a little bit difficult. But our industry on a whole is so much further ahead than what happens in Asia. Certainly my stint in the US, the Department of Labor was still trying to address fiduciary standards over there. So we can be very proud of our industry in terms of our advice in Australia. But going forward, the regulatory landscape will change, simply because the globe has become such a small place. A piece of regulation in UK, Canada, US, can very easily impact how we do business in Australia, simply because a lot of the regulatory bodies have got cooperative agreements with other jurisdictions. In fact, Australia's been busy. We've got about 9 of them in place. So minimum standards are going to be lifting across the board. Now, if you think about regulation, in every market, everyone's trying to solve for the fiduciary standards. How do we put client at the forefront of our proposition, ahead of shareholders and ahead of our hip pocket? Transparency is a problem we're trying to solve. Product suitability. How do we make sure clients understand what they're buying and are those products fit for purpose? And the best in class are actually already differentiating themselves. They're not just looking to meet minimum standards, they're ahead of the curve. And the businesses that are actually going to win in the digital arms race are the ones that will understand changing investor preferences. Now, when I used to ask in the US, a lot of audiences such as this, what is the number one trend? They used to say the rise of passive. Vanguard in the US was taking in $1.1 billion a day into their product lineup. But my feedback was always, it's not the rise of passive. Technology and sophistication has meant that investors are scrutinizing the value of service greater than any time in the history of mankind. Fund managers are under pressure, advice businesses are under pressure from robo-advice, and we all need to demonstrate our value of service for clients going forward. Now, technology and sophistication has also meant that clients are focused on goals-based, and they're also focused on values-aligned a lot more. Certainly in the US, every time there was a mass shooting, fund managers wanted to demonstrate they had very low exposure to small arms. Gender diversity, carbon footprint, All these kind of social values are on the rise across the globe. Now, if you think about the scrutiny of value, a couple of years ago when I landed in the US, the cheapest ETFs were 3 basis points. When I was at university, I could never fathom that there would be products in the marketplace where you could invest $10,000 and for the price of a cup of coffee, a bad Starbucks cup of coffee, you could have your portfolio managed. Well, last year, that changed very quickly. ETFs in the US became 0 fees. 3 providers, Schwab, Fidelity, SoFi, have ETFs at 0 fees. Now, from a Pinnacle perspective, we've been innovative for quite some time as well. Solaris, in fact, back in 2011, launched a zero-class fee units for investors that were scrutinizing fees. So essentially, if we deliver beta or market return, we charge you no fees. But if you deliver an alpha outcome, which Solaris has been very good at delivering, then we would share in the economics of that outcome. Now, this morning at our listed summit that took place this morning, we also announced that we're launching our Pinnacle A-Shares ETFs. And once again, we're becoming innovative in terms of being client first. So we're going to have the first ETF in Australia that's going to have 0 management fee, and it's going to be called the A-Shares Dynamic Cash ETF. We're looking to deliver a cash plus 20 to 40 basis points better outcome for investors with 0 management fees. Now you might ask, what's the catch? There is no catch. The catch is that Australians, we feel, should not pay for their cash to be managed. In fact, if investors have a good experience with us and they trust us with their cash allocation, then hopefully they'll trust some of our asset managers to solve other parts of their portfolio. Now, really quickly, some next generation solutions that are already in market in the US. Fund managers in the US are not thinking of themselves as fund companies. They think of themselves as IP manufacturers. And they're putting their IP into model marketplaces. Imagine your financial planning software or an investment portal online. You have a number of models by different managers and you subscribe to those. Bit of a game changer, the way you consume investment products in the marketplace. Very disruptive to the platform space in Australia and layers of fees. Think about machine learning. This is where computers are being plugged into Bloomberg terminals, Faxer terminals. You feed the machine your company tone of voice, your annual reports, and the machine produces fact sheets or stock reports within minutes of quarter end or month end. You can move your labor force to more high-value tasks. Finally, some banks in Australia are taking up to 3 months to produce a statement of advice. Well, the Alexa capability in the US, there are already service providers where an advisor and client can have a conversation, and based on that conversation, an investment plan is ready immediately. So as an advisor, you can have the client investor straight away, and you can actually focus on the other benefits that you bring to the table: estate planning, asset protection, tax outcomes. So all these are pretty much game changers. And if you think about building loyalty in the digital age, well, loyalty today is nothing more than the absence of something better. And if you want to really future-proof your business, you should be thinking about friction-free. Now, at Pinnacle, we announced last year that we've been investing in our own digital story, and as of last year, we actually have an investment portal available for any advisor and any client. You can directly go on our website, through a few clicks, you can invest in any of the managers that are showcasing today and essentially bypass fees and platform fees. Bypass friction, there's no snail mail, there's no application forms, and you have one repository of all your book of business where you can actually access your tax statements, your transaction statements. So in summary, technology is indeed making life only faster. In terms of innovation, it isn't about survival, it's about thriving in a very crowded marketplace. And in terms of our own purpose, we are looking to enable better lives through investment excellence.